Hi, and welcome to Trendy Options. Today I'll be talking to you about the PMZ. PMZ stands for Pre-Market Zone. As the name implies, it's simply a zone that is created from candle structures within the pre-market. Today I want to show you how it works, what it looks like on my screen, and also why does it work. So the first thing is we always look at the broader market here at Trendy Options. In order for me to stay, let's just say that there's three different trends, okay? And I'm going to draw these really quick. So we have an uptrend, we have a downtrend, and we have a sideways trend. In all three of these conditions, I typically go back to the futures to see where we're starting. And when trend is heading up, I find that price will come back within a certain candle structure of the pre-market zone. This is why this works so well, because previously in the pre-market, in an uptrending market, we have pivoted and we have created demand. Demand, again, is where traders are willing to buy. In this scenario that I'm going to show you, we're using Amazon, and this is actually a trade that we just took yesterday on 10/16/2019. You can see that price left the PMZ and price came back into the PMZ and then up. For demonstration purposes, just so you can see this, we moved out of the PMZ and then we simply moved back to the PMZ. Price went bid, and then this was the result. Now you could easily get this wrong, or you could trade this to the downside. Here at Trendy Options, the script for PMZ also includes the signal that is basically looking for certain things to happen. So let's go ahead and talk about that. What are we looking for to happen above the PMZ? First off, we look for the EMAs and for price to be supported above the EMAs in a long call position. So either I go long on the equity side or I buy calls when price is above many different things. When price is above these yellow dotted lines or yellow dotted line, which is called the VWAP, the EMAs, okay, and then the PMZ. When all of these things have happened after 10 minutes and we look for the higher highs, we get a signal. The signal lets me know to go long right in here, higher high, came back above everything. And even here, if I wanted to front run my system, then I could have taken the position here. And I'll get to that here in a second and tell you how I trade this and what it means to front run and what it means to wait and how I trade those separately. Okay? So once all of this criteria is met, then I'm looking to go long. And as you all know, I will be providing targets and so forth. And we will also have a video on targets so that you can understand how to find those targets. All right, so let's talk about if I were to trade or front run, what does that mean? Well, for me, it means if I don't wait 10 minutes. There are times when the market looks so bullish, and I'm going to give you an example if the market's moving up, that it looks so bullish that I don't wait 10 minutes. I literally buy as soon as price breaks down and then breaks up above the PMZ, I take the trade. But how do I do that? Well, let's just use the number 100. 100 shares, 100 contracts of options. And the way that I approach this is if I break my rule is 10 minutes. If I break the rule, instead of trading 100 shares or 100 contracts, I would trade 50 or 25 or 30. And then on confirmation, so here, let me just draw this out. Yes, price came here, and then it moved above the PMZ. So I could look to buy 50 here, okay? And then price moves back on me into the PMZ. Now it's back to where originally I should have waited. I have two choices here. I can add another 50, and I use the bottom of the PMZ as a stop. And then as price moves up, I become profitable. Or on the signal, when I actually receive the signal, then I'm looking to add into this position. So instead of adding here, I can add on the signal. That would have came right here. So now I have my 100 shares or my 100 contracts, and I'm looking to ride the trade up into the targets. Now let's talk about the simple risk to reward here. In the mornings, you will see, and these close out so they won't show after the close, it'll give you the risk. Basically, it's the top line subtracted by the bottom line gives you your risk. Say in this instance, this was $2. That means when I'm taking the trade, I know that I could lose $2, 2 times the amount of shares that I'm taking. So in this case, if I were to take 100 shares and I were stopped out at $2, then I would lose $200. Okay? All right. So now that we understand that, let's get a little bit more in depth about the stop. Now, all stocks are different, okay? And for purposes of just showing you examples, I want to show you what if this here was only 30 cents of risk. And, let's just write that out. 30 cents of risk, okay? But let's say that typically every time I trade, I typically do 50 cents or $1. Well, in reality, instead of doing 30 cents of risk here, I would actually round and do my 50 that I'm used to trading with, okay? Because sometimes being a stop, if we just put it right at the line, you can see where price comes in and comes very close and kind of stresses you out and gets you stopped out. So I'm always using, for me, I use increments of 50, $1, $1.50, $2, just depending on the stock that I'm trading. And again, if you remember, we're going to have our risk right here. It's going to say right there how much the spread is between here. So I'm already set up to understand how much I can lose before I actually take the trade. All right, so that's how we place our stops. Stops go underneath the PMZ, but typically I'm not right underneath it. I'm going to move it to whatever my risk tolerance is, okay? Now, if we were shorting this, my risk would go, or my stop would go above the PMZ, okay? Now, the PMZ itself, what does it look like on the screen? Well, when the market is trending up and the PMZ is above the list, which you've learned about in your other video, then we call this a positive positive. And your box here is going to be green. When the list is below the PMZ and the market is trending down, this box here is actually red. Okay. Now, is it that simple? Do we just take a trade because the price is above a box? No. We're looking for other factors. So again, just to reiterate, I'm looking for a claim of the VWAP. I'm looking for our EMAs to be underneath price. For example, this candle here, and this example of this candle here. So why does it work? As we said earlier, it's because pre-market, we have created some demand. And when we create demand and price dips back, example, here and here, buyers step in and they take trade or they take price to the upside. If I'm wrong, again, I understand what my risk is and I'm willing to get stopped out before I take the trade because I'm using the process. Now, I will tell you the PMZ is just one piece of overall trading. For me, the PMZ is more about intraday trading. So the idea here is that we use a lot of this in our focus trades. And when we are above PMZ, we're long. When we are below it, we are short. But it is an intraday setup. This is in no way used to trade on swing trades. Matter of fact, you can't see the PMZ on a higher time frame candle. Okay. So now that I've talked to you a little bit about the PMZ and what it does and how we trade it, I hope you have a better understanding. Again, we talked about what is it? What does it look like on the screen? What is it derived from? Why does it work? And importantly, how we trade it. If you have any more questions, please reach out to me. I hope you enjoyed the video. Good luck trading.